Hey, what's going on, everyone? Just wanted to quickly update you on my NVDA trade. And if you remember on Friday, we looked at NVIDIA on this big hammer candle, right? Remember, when we are trying to look for trading opportunities, we are looking for potential reversal patterns. And this was an ideal candlestick on Friday. And I sold two put spreads. I sold the 180 and then I bought the 170. This is called a vertical credit spread. This is selling a bull put vertical credit spread. And in one day, as you can see, it gapped up and I've already made 30% return on this trade. As you can see, this is the details of the trade. I'm up $216, and this represents a profit loss of 32% on my initial risk, right? My initial risk is a total of 270. I've already made 216. So I'm just gonna get in, get out. Here was the trade. I sold this spread for $3.35, which is $335. This spread is now currently worth only $2.27. That's what the mark means. The mark means how much is this spread worth? Well, I sold it for $3.35. I'm gonna buy it back for cheaper, right? This spread lost value because NVIDIA went up, right? I sold this spread down here. So how I close out this trade, it's as easy as this. I'm gonna right click. I'm gonna select these two. Actually, I'm gonna cancel my working orders, right? Because I had a stop loss and a profit target working for me. But in this case, instead of trying to get the full 50% of the net credit, right? Initially, my target was to get half of this, squeeze half of this, which is around $1.75. But since it's already made such a big move in one day and I'm already up 32% profit from the open, I'm just gonna buy it back at 227. So to buy it back, I highlight the spread and I just right click and create closed position. I'm just gonna sell the whole thing and it automatically put in the spread price at 227. Remember, I bought it for $335. I sold it for $335. I'm going to sell it. I sold it for $335. I'm gonna buy it back for $227. So if I go to the trade tab, 227, review and send, you'll see I'm buying my put vertical back, right? Sell to close, buy to close. Basically, what I initially sold, the 180, I'm buying it back to close the trade. I initially bought the 170. Now I'm selling it to close the trade. That's what STC, sell to close, buy to close. And then I'm gonna click send order, and it's filled. So basically, what I just did was I locked in my profit of 200 and some dollars. So now I'm exiting this trade. I'm also currently long the micros on the E-mini S&P micros. And on this trade, if you guys want to take a look what I did here on the micros, this is where you could day trade. And the reason why I placed this trade this morning was because on the micros, which is just like the E-mini S&P futures or the S&P 500, I'm just trading the futures contract so that I can get in and place a quick day trade. All I did was, I'm gonna zoom in here. I saw the big hammer candle on Friday, and that gave me a good, clear indication potentially that it was gonna rally on Monday, which it did, right? It gapped up and it's continuing to trade stronger throughout the day. So what was my entry? Well, my entry here, if I go intraday, one day, let's just go 10 minutes. I entered in right here. I bought at 6799.75. So this occurred Sunday night. So I placed this trade Sunday night and I entered right here. And then when the market opened, right? It opened at 630. It ran up. So my stop loss initially was right down here. See where you see the stop loss? Sell at a stop of 6770. So initially I was risking $30 or 30 points, I'm sorry. And it never hit my stop loss, right? It just continued to gap up, continue to go stronger. It actually came all the way back down at about 830, and now we had this big run up, right? This was another buying opportunity that you could have bought down here at 6793, and then now it's running up higher and higher. So what I'm gonna do is I'm gonna put my stop loss and move it up here. So I'm gonna lock in some profits. I'm gonna go in. This is my stop loss, sell at 6770. I'm just going to replace that order. Make this at, let's move it up to 6792. Actually, I got in at 6799. So I'm actually going to move this up to break even at 6800. So now my risk is off the table. So if I just right click, replace order, 6800. Here you go, Talia. You're welcome. All right. Sorry about that. I'm in my break in between my teaching class. I'm a math teacher throughout the day. So I'm just doing this quickly as a live stream to get you guys updated on my portfolio, my position. So the MES, again, is the micro E-mini S&P 500 futures. This is attractive because when you trade this, you don't need that much money. You only need $586 to trade one contract. This is what capital requirement. This allows you to actually trade the futures or day trade with very little money, right? So here, it only required me 586. I'm already up $205, right? So it's almost 50% of the required capital. I'm already up like 50% of that required capital. So, well, less than 50%. So here, what I'm gonna do is go back and put my stop loss at 6,800, send order, right? So now, my stop loss is now right here. Basically, you can see the stop loss is exactly where I entered the trade. This run up here, right? This is how you could day trade the futures, right? This run up alone from here at 8:50 Pacific Standard Time till 10. So this 20-minute run up trading just one contract made me $200, right? So I'm $200. I am still bullish. If I look at the daily chart of the index, you know what? I'm going to take profits right here because I had a good move already. And honestly, for it to go even higher, that would be a super bullish day. I'm not going to be greedy. I'm actually going to go in and just take profits at 200. 203.75, you're right. You see, as it's going up, $205 every tick. Here, you can see here. I'll show you the actual trade. Every tick on the MES. This is the futures right here. I bought it at 6,799. It's been up $87 change. Here's the bid ask. You can look on the side. Every time it moves in 25-cent increments, meaning the S&P 500, right? The micros. See how it goes 684141. The next time it ticks, it goes up by 25 cents. See that? Unlike stocks go up by a penny every time it moves. The index goes up, or the S&P index moves in 25-cent increments. So every time it moves up 25 cents, you make $5 or lose $5, right? That's why it's so attractive. And it only costs you a margin of 500. So I'll show you, if I were to place another trade, right? Here's the profit loss since the open, $206, $205. It's moving up and down with every tick. See how it's moving by $5, right? 202. Every tick is a $5 move. So if this thing is moving, right, per tick, it's moving like 2 ticks at a time here because it's very liquid. If I were to place another trade, I could either go here, MES, if I want to buy it, right? You could buy it here. I'm actually going to sell this. Click on the ask, send it through. I'll sell it at this price or higher. So I have a order waiting to sell it. If it goes 6841, boom, it's gonna hit it. Boom, I'm out. See that? I'm out of the trade. I locked in my profit, and that's as easy as it is. Make a quick $200, $400 on 2 trades, and I will update you guys on my next entry. If you guys like what you see, make sure you guys put a comment below. I will take a look at whatever stock you want me to take a look at. Just as a quick, here's a couple hints, right? Here are some stocks that I've been looking at. Oracle is setting up as a potential support bounce, right? It also had this hammer candle, but it's not as strong as NVDA. HIMS, right, is also consolidating, finding support right about, let me just go 6 months, 1 year, right? If you zoom in, you can see there's some support right here at about 40. So if this stock is above 40, right, it could potentially go all the way back up to 60. That's a $20 range, but you know you're exiting the trade if it gets below this hammer candle at about $39.26. So trading is all about risk reward. Hopefully you guys learned a bit. Here, let me just quickly show you my trade in NVIDIA, how I saw it on Friday, so that you guys know that I actually recommend, or I actually saw this on Friday before the gap up, because we saw this, right? So if you want to look at my past previous stream, the live stream from Friday, you'll see that I was talking about this on this day, and then today was the follow through, and that's why I locked in my profits and exited the positions. Look at my account tab, you'll see, right? I filled it on Friday, right? 11/7. That's when I sold it for, oh, that was my other trade. I sold it for 330, right? Today, here, let me just go NVIDIA, make it cleaner, right? So I sold it for 330 and 340. I legged in, right? I sold one at 330, sold one at 340. Today, right? This is one contract. Today, I exited both positions, right? 2 contracts. Both of those spreads, I bought it back for 227. To calculate your profit, you just subtract. Remember, it's $3.30 per share. An option contract has 100 shares. So this is $330 that I sold it for. I bought it back for $227. So that is a difference of about 60 bucks times 2, which is $120. No, $200, right? Because that's $103. So $1.03, which is $103, times that by 2 contracts, that's how I made a profit of $206 in 1 day on that gap up. Quick recall, right? Sold it here on Friday, gapped up, locked in my profits, right? Profit loss for the day, what I made $200 minus all the commissions, right? And then my MES, I made a profit of $210 on a trade that I was in maybe 4 hours, right? And it only costs, let's see how much it costs to trade this so that you guys know the margin, right? So if I wanted to type in MES, this is the micro. Micros allow retail traders like us, right, to actually, I'm going to, let's say if I want to buy it, right? Look, it only costs my buying power effect $38. Hold on one second. That is way too low for buying power effect here. Let me delete that. So I'm closed out of this. Let's say I wanted to buy this. I would go trade. This is from the table. If you want to buy anything, actually, I wouldn't want to buy it now. Let me zoom in intraday. Two minutes, 2 days, right? It's running up even higher here. IRA exited. Actually, I need to get rid of my stop loss working order. Okay, so now, if I want to establish a new position, I'll just go to the trade tab, click on the ask, and if I click confirm and send, right, buy one contract, notice the buying power effect is $586, meaning you could day trade this and you only need $586 in your account, right? This is a very, you don't need a lot of money to start trading and creating income if you know exactly what you're doing. And if I actually look at this here, it's at the high of the day so far. It had a really nice run up. I'm going to put in an order below here. If it comes back down to 68.30, let me edit this. If this thing comes back down to 68.30, I'll put on another position. And it's only requiring $586 in my account, and it's only $5 a tick. So I'm not really risking that much. Send the order through. I just wanted to show this, how little it costs to trade it. Buying power effect is only $586. And you can see that it's waiting, right? It's waiting. If this stock comes back down here, I'm going to go long again because the trend is upwards. All right, guys, that was a little more than what I was going to show you guys, but hopefully you guys learned a thing or two, and I'll update you guys later on at the end of the market close to see if I see any other setups or follow through for Tuesday. Actually, Tuesday's a holiday for Wednesday.